What is good, Tsla family? It's Ray J back with another video. And in this one, I'm break down what's going on with the overall market, what you should be watching for moving forward. I'm also going to talk about CPI and how things were looking so far for it, and how this may affect the market for today. But before I break anything down with all this information, before I get into any more details, let me just mention a couple of things. I'm firstly not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends in just 5 days, so check it out before they run out. With that out of the way, let's get on with the video. All right, guys, so looking at CPI, the numbers came in quite decently so far. Let's break down these numbers very quickly before I talk about the charts. Core CPI year over year was 4.7%. That is lower than the consensus and forecast according to Trading Economics. And other analysts were expecting around 4.7%, 4.8%. So it was aligned with expectations for core, which is another good sign. This is also another decline compared to the previous report of 4.8%. So that's a good sign as well. Looking at core inflation month over month, we're up 0.2%, aligning with expectations, which is a good sign. The inflation rate year over year was 3.2%, which is actually not bad because the consensus was 3.3%. And looking at the data yesterday, many of these big banks were expecting 3.3%. So we got 3.2% instead, better than expected. Even though it was a slight increase, it's not that bad. Then month over month, 0.2% is what we saw for CPI alone. Once again, bullish overall, aligning with expectations. Another piece of news that came out that was technically bullish in a way was the initial jobless claims at 248,000, going up from the previous report and beating the consensus and forecast. Why? Because we're seeing more unemployment finally. We're starting to see more initial jobless claims, which is de-incentivizing the Fed to be even more hawkish. I want to make that as clear as possible. So far, so good. Most of the data has been more bullish. I will go over the specific numbers in the future, but for now, just look at this chart right here. You can see that the blue line right here showing CPI had a slight increase in July, but it wasn't that crazy. It was only like a 0.2% increase compared to like the previous report. And then when you look at core is still on a nice downtrend, and core is what was basically like scaring the Fed a little bit more. Jerome Powell was speaking more about how sticky it was, and that's what was causing the Fed to be a lot more hawkish. This is still declining, which is a decent sign. And to add on to this, you can see this chart right here showing the 0.2% increase in July. Once again, very similar to what happened in June. Nothing too bad so far, and this is actually quite good data. So now looking at other releases, we could see, actually, there's nothing else here. Looking at the charts now, we're going to transition to the charts. Things are looking pretty good so far for the markets because CPI came in aligning with expectations, if not a little bit lower. Nothing was hotter than expected, and that's a good piece of news. So what do I see for Tesla? It's very, very simple. There's a possible inverse head and shoulders like pattern that's forming on Tesla now. We have this head here, the left shoulder, the right shoulder forming, which is a reversal signal. And Tesla's testing the 50 EMA on the 30-minute time frame, or this 245 zone. We have to see Tesla break and hold above this. If it manages to do so, we're going to be watching our resistance around this like 247 zone. And after that, we could see this thing push for about 250 plus, right? It's looking more bullish. The market is looking more bullish as a whole. And that's going to be the more bullish case. For the bears, they're going to be arguing that, oh, the market's going to come down. If they say that, you're going to be watching 244 on Tesla, the previous resistance becoming support. And then below that, you have 242 as our major support. For Tesla, I think it's very unlikely Tesla's going to come tanking down or break below this low. I think the low is in, and we're forming an inverse head and shoulders and reversal signal. And Tesla's trying to balance right now. You can see it's trying to push up. We're going to be watching Tesla try to break for at least 250, because one thing you want to note is that we have this imbalance up here, right? We have this imbalance for the inverse head and shoulder. And then this imbalance right here could get filled once the algos start to adjust. So this in turn would take Tesla up to about, let's just see, 250.8. That's a real possibility. We could see this thing push into the 250s. The odds favor that right now. Looking at this imbalance, it's looking more bullish overall. Now, to add on to this for SPY, something similar is going on with SPY. Basically, SPY got a crazy pop as soon as CPI came out, hitting like 450, then came right back down. We're currently at 448, and the market is starting to pump again. We came down to fill this gap, then we came right back up. So in my opinion, we look more bullish. We need to see SPY hold just based off technicals 448. That's going to be the level to watch where we have to hold above that. We're currently at 448.5, so we're holding above it so far. That's a good sign, but we need to continue to hold above 448. If we continue to do so, you're going to be watching resistance at the 30 minutes 200 EMA at 449.5. Break above that, then I'm going to be watching like 450, that entire zone. And then above that, we have room to go up to 451. There's some resistance at this top right here. And then break that, and we have this imbalance all the way up to about 452.75, around there. So it's looking more bullish from a technical standpoint. Things are pointing in the bullish direction. On the 4-hour time frame, we're seeing the MACD starting to curl. And on top of that, you're going to be watching, 450 at the 50 EMA as well. So 450, 448 are going to be two important resistance levels to watch for. If you're bearish, I mean, just somehow if the bears try to like fight back, you're going to be watching, 448 hold. If that fails us, then we have this like important level around 446.8. This was like where the gap was, but this can now act as support. And if that fails us, 446.5 is going to come, and then 444. But I really doubt it's going to drop that much. I think the odds greatly favor upside. And we're going to be watching these imbalances. I think there's a very, very good chance we're going to see 452. And then, we also have this on the daily chart. There's this gap on SPY. There's this gap all the way up here that's unfilled at this 456 area. We might see the market launch for 456 because CPI came in aligning with expectations. So what else is worth noting is we had the bullish divergence I was talking about yesterday. This looks like it's going to play out on the RSI. The RSI has been uptrending when the price was downtrending. Same thing with the MACD, all suggesting a bounce was on the table. And now we have that unfilled gap at 456. I think SPY may ultimately reach that over the next couple of trading days. But for today specifically, let's see if this thing can break 450, then 452. Those are going to be my targets for the upside. I'm leaning more bullish, just to be clear. And once again, for Tesla, we're going to be watching this thing try to make its way up to these higher levels. We have this imbalance all the way up here around this like 250 area. This is likely going to get filled. I'm still leaning more bullish on Tesla. You can see it's trying to pump right now, looking quite nice. We're about to get a crossover on the PPO, looking more bullish as of right now, which is a good sign. For Apple, we're going to be watching this thing try to continue to push. We want to see this thing hold above 180. If it manages to do so, watch this imbalance all the way up to about this 180 one area, very close to that. So we also have our 20 EMA at 181.25. We're very close to that resistance right about there. So watch that 181.25 to 181.49 area. That's going to be a resistance zone. Break above all of that. So then we have 182 as another possibility. But at the very least, let's see it hold 180. If it manages to break that, it's going to be a good bullish sign. Apple is pumping too, which is good for the markets, good for the triple Qs, the Nasdaq, and etc. For the triple Q, this thing has supports to watch for at 369, 368, and 367, all specifically supports, very close to those zones, basically. And then for resistance, we have 372.16. Let's see if we can break that. If it manages to break that, we're going to be watching this thing push all the way up to about 374.7. That is one real possibility. We also have this unfilled gap up to about like 375. I could see 375 on the triple Q if the market pumps, and I think the odds greatly favor that. I'm leaning more bullish for that. For Nvidia, it's a little down in the pre-market, but I think the market's going to try to help it. It has a bullish divergence. We just need confirmation, which would be a bounce. We want to see this thing try to get above 430. For the bears, they're going to argue that 420 will break, and they're going to be watching like 413, 410. The bulls want to see this thing get above 430. That's what you're going to be watching for Nvidia. Break and hold 430. We're going to be watching this thing push all the way up and get very close to this like 440 area, 439 specifically. Then we have 444 above that. I think there's a good chance it's going to try to push above 430 at the very least, but there's no confirmation of a bounce just yet. It's trying to show some life, trying to hold 420. Let's see if Nvidia could do that. I think the odds favor it bouncing, but right now in the chart, it's not showing just yet. It looks like it's going to try with the market. I'm leaning more in that direction, but we have to wait for it to actually happen. It's lagging behind a little bit in the morning, but let's hope we get a bounce. I think the odds favor that as well. And then finally, for like Meta, Meta is also trying to bounce. We have support at 302 and 305 just to watch for. For resistance, you're going to be watching this 309 area, 310, and then it's going to push up for the next level above that around 312. That's going to be my target. I think it's going to try to go to this imbalance at 312. And if that breaks, we have 316, 318, then like 320 as all possibilities. I'm leaning more in direction of the upside. We're going to be watching 312 on Meta very, very soon, in my opinion, at the very least, and then possibly like even higher levels if that breaks. But for now, just look at that imbalance. Same thing for Amazon. You're going to be watching this target of around this 141 area. We actually have this gap just under 142 as well. So we might see Amazon go for this gap fill around almost 142. Also, we have 141 as resistance, very close to that right now. So we're going to be watching that as resistance. And we also have a potential push to about 141 after that. So anyways, that's what I have for this video. I want to keep this one quick. Things are looking more bullish than bearish. Okay, it looks like the market's going to try to pump. Watch resistance levels very carefully and just know that CPI has come out as expected or better than expected on almost every metric out there. Basically in everything, nothing was higher than expected. So that's a good piece of news. All right, so please have a great day. Watch your levels very, very carefully. Do what you have to do. Mark it to the moon as the long term is very bright. And peace out.